as on of date of this call. These statements are not the guarantees of future performances and involves risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Sanghi, Chairman and Managing Director of Cartrade Tech Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everybody, and welcome to Cartrade's Q2 earnings call. I want to, of course, we've uploaded a presentation and the financials for all of you to see in advance. I just want to start off with saying that it's been a good quarter for the company. In this quarter, which achieved the highest ever revenue and profit before tax in any quarter. We're the number one automotive platform in India across used classifieds, horizontal classifieds, and of course in vehicle auctions. We received almost 77 million monthly active users across all our platforms: Carwale, Bikewale, OLX, etc. I think what is more remarkable to drive the performance of the company is 95% of these users come through organic sources, which means we don't pay for these users to come onto the platform. We're now covering almost 450 plus physical locations. We auctioned at a rate of 1.4 million vehicles a year. Revenue for the quarter is at 172 crores, which is the highest ever, as I said. Adjusted EBITDA is at 57 crores, 56.8 crores, which is also our highest ever. Profit after tax is almost 31 crores. And, as you know, we have strong cash balance, debt-free, with about 832 crores of surplus cash. If you go to consolidated results, which is on page 6, as I said, our revenue is 172 crores. Revenue has grown by 27% in Q2 over last year. Half-yearly revenues at 328 crores, which has grown by 35% year-on-year. So the 6-month results showing a 35% growth in revenue. If you see our margins, our EBITDA margins, EBITDA is up at 32.7 crores for the quarter, and the EBITDA margin jumped from 15% last quarter to 21%, which shows the leverage in the business. With increase in revenue, what we're able to demonstrate is an improvement in our operating and EBITDA margins. As you can see, even the EBITDA is up from 21.58 last quarter, which is almost a 50% jump in EBITDA quarter on quarter. 54% jump from last year. And half-yearly, the EBITDA jumped 104%, 54.28 crores consolidated from 26.65 crores last year. And therefore, you see the margin gone up on 11% to 17% half-yearly. PBT is up by 44% to 37.14 crores for the quarter, and 61.29 crores for 6 months, which is up 48%, half-yearly from last year. And that's what shows the leverage in the business. A 35% increase in revenue resulting in a 48% growth in a profit before tax. PAT for the year, for the quarter first time, at 30.72 crores, which is up 500% from last year. And 53.62 half-yearly, which is up 189% from last year's 18.55 crores. So generally, you've seen a very strong set of revenue and profit growth with increase in margins across all periods. If you look at adjusted EBITDA, which is just removing the ESOP cost and adding the interest income, it's at all-time high of 56.81 crores, up from 42.8 crores last quarter, and 37% year-on-year growth, and almost 100 crores for the 6 months ended, which is up 38% from last year. So this is on the consolidated results. We go to standalone results, which is for the consumer group, contains Carwale, Bikewale, some of these brands. Revenues up 23, operating revenues up 23%, which is 55.62 crores. Other income is down because of the acquisition of OLX last year. Our cash balances have gone down. Therefore, see a slight dip in our interest income. But operating revenues up 23% for the quarter, 20% 6 months at 106 crores. It's been a strong quarter performance of the consumer group. I think it's the highest ever revenue in any quarter. You see the employee costs and other costs well in control now, which shows the operating leverage. Even though the revenue is up, quarter on quarter and year on year, you see the actual costs, overall expenses are flat or close to flat, which is really resulting in this massive 464% growth Q-on-Q on EBITDA. And, last year, 73 lakhs becoming 18.4 crores of EBITDA in the first 6 months here. So massive growth in both EBITDA over the small increase in revenue, with these increases in revenues. PBT again is showing a 71% up to 19 crores and, half yearly up at 30% to 32 crores. When you look at profit after tax, 15.75 versus, 12 crores last quarter and 10 crores last year, which is up by 55%, and 28 crores for the 6 months, on the standalone side, which is up by 27%. So you see a strong operating performance here, slightly lower other income. That's because of the reduction in cash balances due to the acquisition of OLX. But overall, again, very, very strong operating metrics being reported in the standalone results. When you look at the remarketing results, which is on page 8, you had a modest growth of about 3% at 57.24 and 3% for the year at 105.84. But we've kept our expenses under control, and there's been slight cost reduction, which has resulted in a 34% growth in profit before tax at 10.26 crores and 14 crores for the half yearly, which is up by 29% to last year. PAT is also up 32% at 7.59 crores and 10 crores for the 6 months ended at 26% up from the last year. So generally a strong financial performance. We would like the revenue growth to be stronger, but the financial performance has been quite strong, even in Shriram Auto Mall and the remarketing group. When you look at the OLX results, which is on page 9, OLX, obviously the growth over the previous quarter from 49.48 from 48.23. It is difficult to compare over last year just because only 2 months of operation during the first half of last year. But at 6 months now, we've achieved a 97.72 revenue, 97 crores, 0.72 revenue for the 6 months ended September 24. EBITDA is up at Q1Q from 805 to 8.55 crores, and half yearly is now at 16.6 crores. I see a small improvement margin from 17% on to 18% quarter on quarter, and PBT is up as well. PAT is slightly down, and that's partly only because of tax incurred on other income. On some of our interest income, we've incurred some tax, and that's why the PAT is slightly lower than the previous quarter. But generally, operations are stable. We feel it's a reasonably strong financial performance. Revenue growth is something, we feel we'll achieve. A stronger revenue growth is something we'll achieve in the coming quarters, but generally a strong, stable performance from OLX as well. This is a good summary of the consolidated and subsidiary accounts and finance and operating metrics. I'd be happy to take questions now, from each one of you. Thank you.
Thank you so much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment as the question queue assembles. We have the first question from the line of Siddharth Bera from Nomura. Please go ahead.
Yeah, thanks, sir. Hi, sir. Congrats on a good set of results. And happy Diwali greetings to the entire team as well.
Happy
Diwali. Sir, first question I have on the OLX business. So if you see the ramp up, now it's been like close to 1 year we have this business, we are operating and running this. How do you think has been the performance? Is many of the improvement still yet to play out, or do you think it is taking longer? If you can guide us about how to look at the revenue scale up in the OLX business, and some more color about which are the segments, any mix or any more data if you can share in terms of OLX, how the business is changing, or what are we doing here to sort of scale up the revenues to be helpful.
Sure. I think happy Diwali to you as well. So that was the second thing is, we've over the last, it's been about 11 months to the end of September from the acquisition of OLX. And actually, 13 months or so. And obviously, the attempt in those first 13 months was around stability of technology platforms, teams, recruiting all the product technology teams, moving all of this technology and product to our own environment, stabilization and growth of traffic, consumer traffic, processes and sales, etc., etc. And the segments are pretty much the same. It's 45% of it is auto, used cars and used two-wheelers, and the rest is non-auto, which is led by real estate, jobs, electronics, mobiles, etc., etc. We've obviously, there has been revenue growth in the last 13 months of operation during this period, and we feel a lot of the things we've done and a lot of the foundation we've laid, the significant part of that growth will come in the future. When you take over a business, I think you lay a foundation where for the next 5 to 10 years you can see that growth. So some of it has started to play out. Obviously the auto side is something we were more comfortable with, and obviously a lot of the initiatives were launched on the automotive side first. But now we are also working heavily on the non-automotive side, which is other segments of real estate, mobiles, and jobs, etc., etc. And we do feel in the coming quarters, we'll start seeing a more a stronger growth in revenue, I would say, across various sectors which we're working on there. So we feel very confident about that. We also feel very confident about the quality of traffic and users and the brand of OLX, right? I mean, almost 30 million people a month come every month, and as you know, we spend no advertising on OLX, which just shows the affinity of the brand, right? As one of the leading or probably the leading used product platform in the country, right, where people can come in and sell their products or buy used products, right? So we feel a lot of the initiatives we're taking will and a lot of the growth which is will show in the next few quarters by the initiatives we've taken in the last 13 months. But when we took over the business, it's important to bring full stability and transfer of technology and product to our environment first. So that's what we did. But we feel now we're actually working on the business very hard on various aspects of sales processes and other things to make sure and put up a strong foundation for growth in the future quarters coming ahead.
Got it, sir. So second question is on the consumer business, where we did see a very good growth sort of playing out. Here again, if you can throw some light about how is the mix between OE and new and used car, and where is basically the stronger traction if you are seeing in any particular segment worth highlighting?
The consumer group is mostly 85% new vehicles, right, as you know. And there itself, the car industry had a very modest 2%, 3% growth in the first 6 months of the year. In fact, in the last 2-3 months, it's been degrowing. And the two-wheeler industry also had robust growth of 18-19% for 6 months, as the industry's been. We've actually seen growth across segments, across all new used segments. I feel one of the even though the industry of car growth, the growth in the car industry only 2-3%, it is still at a high base of last year, and that's helped us as well. So we feel good about the car industry as well as the two-wheeler industry and the used car industry the way they stand. Some of the results have come in the first 6 months, and we just hope and we think that some of this will play out still in the next 2-3 quarters coming. So it's been a reasonably strong performance from the consumer group, both on the car side, bike side, new and used both, I think.
Got it. So lastly, on this auction business, now volume seems to have gone up quite a bit compared to last quarter or year in the current quarter. So are we looking at any signs of turnaround in this business also as we enter the second half of the year? Or do you think this business also may take still longer for some of the recovery to play out?
We think that this, definitely seems to have bottomed out the repossession cycle, right? It doesn't seem to be getting, it seems to have bottomed out. We do feel confident that this business now seems to be, getting better. And of course, the other segments, when repossession has gone down, we build other segments which are also helping at this point of time. So it's a mixture, a little bit of cost control, a little bit of revenue growth, but we do feel that in the next couple of quarters, SAMIL should deliver a reasonable performance. It's hard for us to right now say whether repossession in banks and NBFCs is getting stronger or not. I mean, it's a little early to say that, but we do feel it's bottomed out, if that's for sure. Yeah.
Got it, sir. Thanks a lot. I'll come back and thank you.
Thanks a lot. Thank you. Yeah.
Thank you so much, sir. The next question is from the line of Ankit K from SmartSync. Please go ahead.
Yes. Thank you for taking my question and congratulations on good set of numbers.
Thank you.
Yeah. So my first question is related to the to all the three segments actually. So if I look at the segmental revenues, coincidentally all three businesses are having roughly the quarterly revenue run rate of 50 crore today. And but when you look at the life cycle of all the three businesses, probably they all three are completely different in their life cycle. So I just wanted to know from your side. I'm not looking for any guidance, but just directionally, how do you see these three businesses, three distinctly different kind of businesses growing or doing from here over the next say 3 to 5 years, qualitatively speaking? I'm not talking about any numbers per se, but how do you see them growing? Yeah.
Sure. Yeah, thank you for the question. I think the first part is because the consumer group, which is Car Wale, Bike Wale, is 85% new vehicles, right? Which is cars and two-wheelers. And obviously, we feel with the car industry, India is the largest two-wheeler market in the world, right? It is also in the top 5 car markets of the world. And naturally, for countries to grow, when you look at the penetration of cars in India, if you're going to be at 30 or 40 or 1,000, the penetration is extremely low. So you do feel over a long period of time, 3 to 5 years, what you've asked, the car industry will grow and the two-wheeler industry will continue to grow with personal mobility on the rise. And therefore, we feel very strongly of the health of the consumer group by itself, which is 85% dependent on new vehicles, right? We also feel, for us, if we had seen 2-3 years ago, it is harder because, when there was a semiconductor issue and other supply chain issues in the automotive industry, and demand was more than supply, it affected us because they stopped manufacturers and dealers from advertising on our platform because they didn't need to. They were, sold out because of just the availability of vehicles was low. When availability is high, which is what the situation is today, where supply is more than demand, it's a little more favorable for the company. And we do see a strong, demand cycle for the next 3 to 5 years in the automotive industry, but we also see supply being available. And therefore, we feel very confident about, the consumer group by itself over, a 3 to 5 period. And obviously what our attempt is not only, is just to go, as we said earlier, in Car Wale or in Bike Wale to move from a situation or go deeper into our transactions with our manufacturers and dealers and for our customers to not only be able to find their car, select their car, connect to a dealer online, but also tomorrow buy cars online. So we're moving and building technology and going deeper and deeper in that process for, all our customers and dealers and manufacturers. So naturally, we feel confident about that. On the Shriram Automotive side, in the last year and a half, with repossession of vehicles coming down and supply to us coming down from that source, we had built a whole retail segment, which is almost 40% of our business today. So obviously, we believe optimistic about growing the retail side of the business, but we also believe in times to come with financing going up, demand for vehicles going up, new vehicles, repossession will also grow. And obviously, in the next 3 to 5 years, we feel good. Both the retail and the repossession market will grow, and Shriram Automall will be a strong player, will be a big beneficiary of that. So we feel confident about that. And then the third, is OLX, where the TAM of the business we operate in is limitless, right? It is basically handles all used products in India. It's the number one or leading place where any consumer can sell a used product or buy a used product. So we obviously feel that TAM in India is just, as I said, limitless. I can't put a number to it even. We have a large set of Indian consumers who as some of the data we've shared before, more than 30 million users a month come on OLX to sell a product, to buy a product, used product, and we have obviously a significant leadership here. So there's limitless growth opportunities here, whether it's used cars, whether it is used bikes, whether it's used mobile phones, or goods, household goods, like furniture, etc., or even homes. And we feel very confident about OLX's future here as well over the next 3 to 5 years. So on the whole, across all three businesses, we see tremendous amounts of levers to grow. I think one thing I want to add here, as you might know, that, and we've demonstrated successfully over the last 5-6 quarters, is that every increase in revenue in this company, results in a very strong profit growth. We have a lot of levers in our business, and normally when our revenues go up, only a small amount of manpower cost goes up with it. But a large part of the revenue growth, leads to profitability, which you've seen.
Got it. Thank you so much for the detailed answer. Is it fair to assume that, say, 3 to 5 years down the line, probably our consumer business will form a large chunk of our revenue compared to what it is today, because that is probably the fastest growing also.
No, we don't think so. I think we think all the three businesses have opportunities. I mean, they're all similar size today, but we don't. It's hard for us to say that one will be bigger than the other. They all have their reasonably opportunity to grow. So I won't want to predict that the consumer group will be the largest, or OLX will be the largest, or Shriram Automall will be the largest. I won't want to predict that right now.
Yeah. So
but they all have the levers to grow. Yeah.
Got it. Yeah. So second question is related to the competition. So ever since we got listed and we started doing con calls and presentations, one slide which has been always there is what you share regarding the Google Trends, where Carvale is always on top compared to all the other competitors which you share. When I look at the on-ground feedback from maybe customers or dealers, we get some really good feedback about the competitors also in terms of the business which is happening. So can you share one reason why on Google Trends we are so high on the chart and consistently?
It's a brand, right? So Google Trends is basically how many people search your name, whether it's OLX or Carvale or Bikewale, into the search for your name, right? And come to a platform, which means that it is the number of people who remember Carvale versus other people. That's what it is. It's a digital brand index. And that's what it is. It's got nothing to do with dealers. It's got to do with consumers. It's the reason the 77 million MAUs come to these platforms. Just to give you context, 77 million people a month come to Carvale, Bikewale, and OLX. That's a huge number. And 95% come in an organic manner, which means we don't pay for it. It's completely free of advertising. That's how you have the margins we have in the company. Because 95% of our users come without any advertising cost, which is partly a reflection of Google Trends, as you see, right? And which is why, the consumer group or Cartrade Tech as a company is extremely profitable, is because of the brand affinity of Carvale, Bikewale, or Rolex. These are strong brands now in the businesses they run. And that's a reflection of Google Trends. It's got nothing to do with talking to dealers, actually. It's not connected with that. It's a consumer.
Okay. Thank you so much. That was very
helpful,
and all the best for the future.
Thank you.
Thank you, sir. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Sachin Dixit from JM Financial. Please go ahead.
Hey, hi Vinay. Congrats on a great set of results. Quickly coming to questions, I wanted to understand that we did discuss that on OLX side. Obviously, there are a bunch of low-hanging fruits that we can probably cater to, first of all. I wanted to just check on that.
The voice got a little smudged. Can you say it again, please?
Sorry, I was saying that on OLX side, we have discussed that there are a bunch of low-hanging fruits that we can cater to in order to deliver the growth that we wanted. I wanted to just get an update on that. Where do we stand on that? Have we seen any ramp up in terms of advertising income coming from OLX, or any price hikes or any such things? Can you please give an update on that?
Sure. OLX, I think one of the things we've been working on are first the automotive side, which is the used car classified side of OLX, right? And then the non-automotive side. There's also an advertising side, which is driven by advertisers coming and putting display advertising on OLX, right? The three different revenue sources in a way. I would say a lot of the work has gone in. I wouldn't say that a lot of the revenue what we feel would kick in very quickly has all come in. I think we will probably see some of this growth coming in the next 2 to 3 quarters. Obviously a lot of the foundation platform work is done, right? Which is the product side, technology side, people side, right? Processes side. So many small things after the M&A. But as I said, some of it has come in terms of revenue growth, which you can see, and some of it is a lot of it yet to come. And we just feel like OLX is the kind of platform where we'll always be saying this over the next 3 to 5 years, because this is so much. The time is limitless, as we say, right? Once we get one side, we go to the other side and keep going deeper and deeper to monetize more and more aspects of the platform, right? And get more and more consumers on board. So it's a non-stop effort. I think we all are spending lots and lots of hours on it. And we do feel in the coming quarters you'll see some of that. And even in the coming years, not just the quarters, because as I said, there's just no limit to what can be achieved in OLX over the next 5 to 10 years.
So understood. Quickly on revenue side on OLX again, right? So we delivered roughly 2% QOQ growth. Now, if we recall, like when this acquisition happened last year, we did talk about almost 20%+ odd growth. In order to deliver that, it looks like we need to deliver anywhere between 30-odd%, 32-odd% YY growth over H2. Do you think we are on track for that, or that's going to be a miss on that piece?
I don't know. I don't want to give any guidance on revenue. As I said, we don't normally give any guidance. So we're working on obviously all the growth levers, and some of them will happen next 6 months, some will happen the 6 months after that. But all I can say is we do see a very long-term growth opportunity here. I don't want to talk about the next 3 months or 6 months very specifically. I think the one thing that's happening in OLX is that every quarter we get better than the last one, right? And not just in OLX. I think that applies to the consumer group as well, where we actually make progress every single quarter. You see the numbers almost every single quarter with year-on-year better, right? So we keep doing that, and some of it will play out now, some will play out after 3 months, 6 months. But the effort is to continuously do that. And as I said again, when we grow our revenue, the margin expansion is quite high, right? The moment we grow revenue.
Right. Yeah, that's so. Coming to new auto side quickly on that piece, like we delivered close to 23% growth in the quarter, while auto industry continues to struggle, to say the least. Do you see this trend sustaining? Obviously, you have highlighted that this is probably the best time in advertisements where to speak.
Yeah, we see some of this continuing. I think I do feel like October, December normally is a better quarter than even even July to September normally every year. I don't think that's changed at all. I do think October, December, it is going to be better. And probably this trend might continue. It's possible that, I do see that volumes are generally at the highest ever for two-wheelers and cars, even though the growth is lower for cars, or absolutely no growth, but the volumes are pretty high, and supply is higher than demand. So it's reasonably a favorable market condition, I would say.
So the reason why I asked that question was last year in H2, our YOY growth dipped quite sharply compared to H1. So that's why I am asking this question. So
the growth rate may be lower.
Yeah, growth rate dipped. Yeah. So which is where I'm coming from. Like, do you see that growth rate, like this 23% odd YOY growth rate sustaining in H2? Or we can expect...
I don't want to give a guidance on growth rate, but all I can say is normally the market condition is slightly better. And I do feel like these quarters will be better than the previous quarter. That's what I do feel. But I don't want to give a growth rate guidance.
No worries. Thanks so much. Happy Diwali.
Yeah, thank you. Thanks, Sachin. Thank you. Happy Diwali.
Thank you, sir. We have the next question from the line of Akshay Satija from Alpha Invesco. Please go ahead.
Hi, congratulations on good set of numbers and happy Diwali to all of you.
Happy Diwali.
So my first question will be for our remarketing business. So our EBITDA per car seems to have improved from what it was in Q1. So I just wanted to understand, is it because of contribution from maybe retail sales, higher number of retail sales, or it's just that, as you said, the operating leverage that we sold more cars?
It is
also specify what was the retail percentage.
It's also some cost. We're talking about the remarketing. There's also some cost reduction. But
okay.
It is also, the product mix has not changed much. But there is some cost reduction as well, which will help.
Okay. If you could specify the numbers for retail and B2B that you do for remarketing.
Anisha, you want to give it? But I think it's 40% is retail, which is quite similar to what it was earlier. 39 earlier, it's 40 now, I think. So it's quite similar, actually. Not much has changed.
Okay. So could you also share the new versus used car ratio for the consumer business? And if you could just go a little into detail for the App Store business that we have. So what would be sort of revenues? My belief is that we report App Store under the consumer business. So what will be the revenues or volumes for the App Store business, and how many stores that we hold of App Store as of now?
Sure. So I think the first part, about 86% is new in the consumer group. That's one, which is pretty similar to what it was in 85 and now it's 86%. That's the first question. The second question is App Store. Anisha, you want to tell how many outlets we have? But App Store plus which outlets are actually growing. What is it?
165.
165 are the number of outlets. We normally don't discuss the volume and the revenue as yet. But the 165 outlets, something obviously we are growing. And not only are we growing it here, I think OLX has a very similar number of OLX branded stores as well for used cars, right? Am I right? It's a similar number. Sorry, what?
About 170.
170. So they're totally actually 335 such stores now. So the intent of these stores, I'll be honest, was and still is the ability for a consumer to come online and select a good certified car and then buy it with a and eventually buy it in a one-click experience, so they can actually have a completely online experience. And we're working towards that. But the coverage actually is improved with the OLX acquisition. Is 165 actually become about 330 now, or 340 stores. Yeah.
Okay. So the final question would be, could you just elaborate a little on the automobile stores and on that front? So say we list roughly 1.2 million cars a year, but we're selling only 20% of those cars. Just wanted to understand what happens to the rest of the cars. Are they kept as an inventory, not with us, but with someone who's listing it with us? Just wanted to understand, is that inventory carried forward to the next quarters, or just wanted to understand the business front.
Sure. First, a large part of that inventory does not come physically. It's not. I don't have the exact number, right? But a large percentage only comes online. It doesn't ever come physically to us in the automobiles. Some percentage comes physically, and even in that percentage, if the seller decides not to sell it, they can take the vehicle back and then give it back, whenever they feel, they would like to sell it again. So the 20, I think it's 25 or 28% is a conversion ratio, which is of every 100 vehicles coming to auction, that many get sold. I think that's what it is.
Okay. Do you see this number probably could go up or?
No, it's been quite stable actually. It's not gone up. It's been quite stable. I think the conversion ratio will probably be stable. Our attempt here is, of course, to improve conversion ratio by getting more buyers, but it's also through increasing volume on supply. I think there are two different efforts here. But we don't see much. There's not been much change over the last couple of years in the percentage actually.
All right, that's it from my side. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, you may press star and 1 on your touchtone phone if you wish to ask a question. We have next question from the line of Vijit Jain from Citigroup. Please go ahead.
Yeah, thanks. Hi, Vinay. Hi, Nisha. Congratulations on great 2Q across the three businesses. My first question is, I note on the presentation that organic traffic growth was especially stronger than the overall growth this quarter. But you did increase your standalone marketing spends about 20% this quarter, right? So my question, I guess, is that with an eye towards the next half of the year, are you seeing any trends which makes you want to increase your marketing spends here? And I think a related question to that is, in addition to what you show on Google Trends, one can see on app traffic and other third-party data sources as well that you have taken market share in both cars and bikes from the competitors this year, especially on the bike side. So if you could give a view on, what is happening there really. Is your business in the bike side, for example, particularly higher now this year versus last year?
Yeah. Okay. The first is the marketing spend. No, marketing spend in these businesses is very, I would say tactical, but it's not brand-driven expense or traffic-driven expense. It's very targeted at manufacturers who may want to sell a certain kind of product and who are spending money on advertising, and they try and build a specific consumers for them, and that traffic and that advertising is incurred with them. 20% is up, but it's a very small number. I mean, the numbers are really small here, right? Our total are insignificant. So the amounts are very insignificant here. That's one.
Right.
I would not think and correlate that with any increase in advertising or any significant increase in advertising spend in the next 6 months. I would not think that would happen. It may be directly a little bit in correlation with a little bit of revenue, but it's not likely to go up substantially in the next 6 months at all. This is also not driving the growth in traffic, as we said. Actually, the organic percentages are going up. It's 95% now across platforms. So it is going up. The brands are getting stronger. Our consumer traffic, actually in absolute terms, if you see, it is in the deck as well and on the last few slides, is substantially up. So, the quantum of traffic up cannot be done by advertising. This is just done on brand and organic basis. Two-wheelers has gone up a lot, and so has cars gone up. So both traffic on both counts has gone up. We do feel that one is that, as I said earlier, the demand for cars is not down. It's just that the growth rate is down, right? If you look at the first 6 months, actually, it's grown by 2-3%. So it's not negative, right? Number one. Number two, the two-wheeler industry has been very, very strong, which has shown growth in every parameter, right? I mean, the volumes have gone up, traffic is of course going up, everything is going up. So it's a massive opportunity for us as well, the two-wheeler side. But both cars and two-wheelers have been quite healthy. So in fact, the traffic growth has been very, very healthy, I would say. Also, some of the new launches has fueled this, right? I mean, we've had a couple of big launches in the car market where there's been a lot of interest on traffic, right? I mean, the traffic side.
Right. So, Vinay, any broad sense on, I don't know if you want to, if you don't want to disclose, split between, say, two-wheelers and four-wheelers, maybe some sense in terms of, what growth rate you saw in the two categories this year?
It's been strong on both sides, I would say. I mean, two-wheelers on a smaller base, right? So it's outpaced the growth. But generally, it's been strong both places. The revenue split is something, Anisha, have you given the revenue split on two-wheelers and four-wheelers? No, not yet.
Okay.
Not yet. Not yet. Okay, because it's quite, okay. It's actually being mixed up between OEMs and dealers, not so much on two-wheelers and cars.
Right.
I think that's the reason we've given the OEM and dealer split.
Right.
Yeah, but I think we see robustness in both actually. Cars and two-wheelers both has grown.
Got it. Great. And my next question is, the remarketing business, right? So, I guess the mix shifted a little bit in the repo favor this quarter because obviously I can see, the auctions went up, but the realizations went down. So,
slightly better. I think there's some suppressed pricing of used products as well, used vehicles as well, which is affected a little bit. But generally, that's why I said repossession seems to have bottomed out. It's always hard to predict because not something in our control.
Right.
But seems to have bottomed out, is what I said earlier in the call. It seems to be a little better.
Right. And you have, I think you mentioned it around the end of 4Q results, but you have added about 100 locations across, Shriram Automall, Appsure and OLX this calendar year, right? I think last 4Q you were around 350, now you're at 450, thereabouts. So could you give us a sense of where, these additions are coming? Are these mostly in Appsure here or
mostly in Appsure, Signature and OLX. They're not in Shriram Automall either, very few. So it's almost all there.
Right. And so basically about 50 to 100 store ads on the Appsure side.
Probably 100, probably closer. I don't know the exact number, but almost all the additions will be there. I mean, I don't think we're adding more than 3-4 automalls. Am I right? Could be more than, maybe 5. We don't really add very many automalls, so it's mostly come in OLX and Appsure.
Got it. So with Appsure, do you think you could, this is a pace that you could probably continue to?
Logically the pace, yeah. There's a lot of work to be done on the pace, which is probably will continue, both on the OLX side and the Appsure/Signature outlets. What we're looking at doing is obviously adding a lot more tech and product to it, and over time, as consumers want, the whole idea is creating the stores just to give a differentiated experience to a user on Carvale or on OLX, right? And I think that is still something we're working on. Distribution seems to be catching on, but now we've got to also, when you come as a consumer, provide this, one-click ability to buy a used car if you want to do so, right? I think that maturity will also come in consumers over time, right? So it's a combination of all of that.
Got it. And my last question, Vinay, just the OLX business, given the nature of the business, the October, November, December quarter should have a fair bit of seasonality related uptick. Not just, I know you said that for the auto business, but also for the non-auto part.
It should be better. It should be better because normally October is definitely normally better. November's got holidays and stuff, so you don't always know. Because Diwali, by then people come back, by then businesses really start all over again, right? But generally, this OND is normally a little better than July to September. Generally, yeah.
So the question I was trying to, the answer I was trying to get to also in part when I was, we have a lot of these festive season sales that the e-commerce platforms run, and I would imagine some of that will drive traffic to yours for used transactions. Is that a fair understanding of how this would work?
No, I don't think they're really connected with, even though you're right, these e-commerce platforms have sales. I'm not convinced they're directly correlated with, the traffic on OLX or definitely not Carvale. But I would think that, just a season is normally better for anybody, right? I think normally October is always, this year Diwali and Dussehra both happen to be in the same month as well. So it is a strong month always.
Correct. Yeah. Understood. Thanks, Vinay. Those were my questions, and happy Diwali to you and Anisha.
Happy Diwali. Thank you, Richard. Thank you.
Thank you so much, sir. We have the next question from the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah. Hi. Thanks for the opportunity.
Hi, Rahul.
Happy Diwali, Vinay. And
Happy Diwali, Rahul.
Yeah. Hi. So just a couple of questions. So one got answered partially in terms of seasonality for OLX. So you're saying there could be some bit of a seasonality element in Q3. So that is answered. But just on the other side, OEM to dealer, we used to share this split earlier on. Do we share that now?
Yeah, we can give it. Can you give the OEM? 67. Was it 67?
Yeah, 67.30.
67%. 67.33.
Oh.
It's not changed much. I think it's just more or less been.
Okay. So, is it the right understanding when we say new to use is 85-15?
Yeah.
Then this 67-33, this 67 is out of the 85, and then the 33 is a split between the new and used.
That is right.
Okay. Got it. And lastly, just wanted to check in terms of progress on, these allied, services that we, kind of talk when we say, buying vehicles at the click of a button. So let's say financing or insurance, have they started contributing to our revenue in any way in terms of?
They are very small revenues. Insurance is not. Financing is a very small, revenue contributor. But the important thing is the tech and all of that has started to play in, right? So you can see on almost all our platforms now that in one click you can get a loan, right? I think those are the kind of things, and a lot of the products will launch, whether it's AppSure or just loans, to enable a lot of the future transactions might come online as consumers want to do more and more. So when you buy a loan today and you come to Carvale or Bikewale or OLX even now, and you apply online and you get sanctioned instantly by multiple banks and vendors, you get a sanction. But from sanction to disbursement is not necessarily that all the banks and other partners are ready to at this point or able to do it even at this point. It requires also documentation, KYC of customers, etc., as per their processes. So it's not fully, I would say, the product is although gives you a sanction instantly, it doesn't still probably give you a loan in your account in the next 1 minute or something, right? I mean, the disbursements, the sanction disbursement cycle is not fully online yet.
Got it. So the meaningful accretion in terms of monetization will only happen when that piece also falls in place. Is that the right?
I think the important monetization might improve that, but that's not the intent here. The intent was always that we give this journey to the buyer, to a car buyer or two-wheeler buyer or used product buyer. That listen, when you buy a product, you can get a loan instantly, so you can buy the car online. If you like, a large part of two-wheelers and cars are financed, so if you don't get the loan instantly, then buying a car on one click is almost impossible, right? Because if you want a loan, the journey is anyway going to get broken, right? And I think that's what we work with banks and other stakeholders to see if this journey can be completed online.
Got
it. More from a customer experience angle. Monetization is one thing, but it's also experience.
Yeah. Understood. And just lastly, this is not very Cartrade or Carvale specific, but just wanted to understand from a financing penetration standpoint, if you were to look, let's say 4-5 years back to now, for used vehicles, both used cars and used two-wheelers, do you see a significantly greater proportion of people going for financing for their used vehicles, or is it more or less the same? How
new cars? So new cars, as you know, is for the last 4-5 years, maybe last 10 years, it's very very high the percentage. In used cars, we've actually seen it being not move much. I feel like the industry has grown one, and second bigger thing is that you still don't have a large number of organized financiers financing used cars, right? a lot of people buying used cars are taking loans, from unorganized sources, right? It could be a personal loan, it could be, like a personal unsecured loan, or it could be even be, from an employer or someone else, right? So you feel that, the long way to go in used financing in India. It's actually a massive opportunity. I think for any bank or any NBFC, it's just a big opportunity.
Understood. Thanks, Vinay.
Thank you. Thanks, sir.
Thank you so much, sir. The next question is from the line of Mohit Madhiwala from Envision Capital. Please go ahead.
Hello, and thank you for taking my questions. Great set of numbers, so congratulations on that. Just a few bookkeeping questions. Number one, I can see on the balance sheet that in the non-current assets, other financial assets have gone up, while in the current other financial assets they have gone down, kind of in a similar amount. Just wanted to understand what that movement has been firstly.
What is that, Anisha? You want to explain that?
I'm sorry, Mohit, your question is that your other financial assets have come down and the investments have gone up. Is that the question?
No. So my question is that in the current assets part of it, it has gone down by about 50 crore from March 31st to September 30th. Whereas in the non-current part, it has gone up by 58 crore. So just wanted to understand what this is related to.
Just give me a second, because most of it would be just fixed deposits. We would have moved it to investment in mutual funds. So give me a minute.
Okay, got it.
It must be that. So was it Subek or Anisha? Was that Subek or?
No, both Vinay and Samal, there have been some, but no other change. All cash balances improved by 50 crores.
Okay. Next question was basically that there's been a bad debt written off of, and this is a very small amount, but of 75 lakhs. So just wanted to understand where this has come from.
Anisha, I don't remember which client it was, but is it the consumer group?
Yes, Vinay, we have done a cleanup for debtors which are more than 3 years. We have kept provisions in the only what was beyond 3 years is what we have written off this year.
Yeah. So what we do is the provisioning, of course, as per our accounting policies, and then we move from provisions to writing off. I think that's what's called. We move from provision bucket to the write-off bucket.
Yes, it's fully provided for.
Okay, got it.
But it's fully provided for earlier anyway, is what she's saying.
Okay, got it. And the ESOP costs, we are still at the run rate of 6 crore per quarter, right? So this is expected to continue going ahead?
Yeah, I think for this year it is going to be similar. It should, as per the vesting schedule, come down from next year further. But at this point, it'll continue, through this year, and I think it comes down next year as per the vesting schedules.
So for FY25, we would still be at around a full year 24 crore kind of on an ESOP cost.
That's right.
And that's right. Slightly lower than FY26.
It'll come down in 25. In 26 will come down. That's correct.
Okay, got it. And just one last question. What would be a reasonable kind of overall tax rate to assume for the full year FY25? Because we are currently at around 21% on an effective tax rate. So just wanted to understand where we can end for the full year, given all the OLX kind of, let's say, losses would have been absorbed as well.
I think there is no, Anisha, correct me if I'm wrong, but there is no tax in OLX, right? And there is no tax in the standalone entity. There's only tax in Shriram Auto Mall. The tax we're seeing on the standalone entity is deferred tax, which has come from the change in the budget on how our treasury income is being treated, right? I think it's this whole change from long-term capital gains tax on debt funds, right? Which is the entry you see. It's not actually pertaining to the quarter. It's pertaining to a previous period. So the deferred tax will probably continue a couple of more quarters this year, and then will go away. It will not be there anymore. But generally, there's no tax in the standalone or in OLX this year.
Right. Okay. So I think I misspoke previously. The effective tax rate for this quarter was 17%. So that's why that's the
mostly deferred tax, which is
right.
But change in the budget, right? When they move this indexation on mutual funds.
Got it. So even for the full year, it would be at below 25%?
It's exactly the same. This increase will be exactly the same to the year. Yeah.
Great. Okay. Thank you so much. And best of luck.
The effective tax will be lower because the profit goes up. The effective tax rate should come down. This amount of deferred tax is identical for next 2 quarters.
Okay, great.
Great. It's not am I right, Anisha? This is exactly
Yes,
the same amount.
Yes.
So the profit went up, the effective tax you'd see would go down actually. Because on our normal business income, there's no tax.
Okay, understood. Great. Thank you, sir, and good luck for the future.
Thank you. Thank you.
Thank you so much. We have the next question from the line of Sachin Dixit from JM Financial. Please go ahead.
Sorry, I had a couple of bookkeeping questions as well. So the first one being that when I'm adding the depreciation expense across the three segments, it's not matching up with the console number by a decent margin. Why is that the case?
What is not matching, sorry?
Depreciation expense, and this is consistent across a few years and quarters. Like this is what we keep on seeing.
Yes, Sachin.
You're saying when you add up depreciation doesn't total. That's what he's saying.
Yes, because there's an entry at consolidation, Sachin. There is a contract asset that we've created on the SAMIL acquisition. That entry gets passed only at consolidation. So the 1 plus 1 will not equal to the consolidated number of depreciation. It's an entry which comes only in set of accounts.
Is it fair to assume that we use that plug to be a part of Shriram Automobile business or the marketing business? When you think of segments?
No, it's a very specific entry for the Shriram acquisition, which was done in 2018, where a contract asset was created. It's a depreciation on that particular asset which is created in the consolidated set of accounts. It's not to do with OLX or consumer group. It's only for the Shriram acquisition.
Yeah, understood. A second question is on lease liabilities. So we are seeing that those lease liabilities went up by roughly 10 odd crore between March 31st and September 30th. Considering that the business is largely non-asset heavy, where are these lease liabilities rising from?
No, it's also from OLX, right? I think that's where it come from.
Yes.
Correct. Yeah.
No,
but
but
one answer is rentals for OLX, right? Because it's only been 2 months of the year. Last year was only 2 months, 1.5 months, and this year is the whole year. 6 months.
No, but this is a balance sheet entry, right? You were giving a snapshot as of March 31st or September 30th. Number of months counted, that should not make a change.
Sachin, which number are you comparing? The balance sheet for lease.
Yeah, in balance sheet, lease liabilities as of March 31st were 112 crore. They went to 122 this September 30th. What are these lease liabilities coming? Where are these coming from?
The increase is coming from SAMIL. There are about 7 new leases added in SAMIL. From the compared to that you're seeing from March to September.
Understood. All right. Thanks so much. That's it.
Thank you so much. We will take this as our last question for the day. I would now like to hand the conference over to management for closing comments.
Thank you everybody for joining this earnings call, and we are quite buoyant by the quarter we've just had. And look forward to talking to you again in the next quarter. Happy Diwali to you and all your families. Thank you, everybody. Thank you.
On behalf of Cartrade Tech Limited, we conclude this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.